What is up, bros? Today we got fair value gaps. Have you ever noticed how sometimes price moves so aggressively that it leaves the gap? By the gap, I mean when the first and the third candle wicks don't cover the body of the second candle completely. So it leaves the gap. So here's the wick and here's another wick. That's called the fair value gap. It's an area where the market moved too quickly and left an imbalance. Institutions often use these areas to re-enter their positions. So instead of chasing price and entering too late, wait for a return to the imbalance. And here are some live chart examples. Boom, boom, here we are. So, what I wanted to say is when we are in an uptrend, we form bullish fair value gaps. So, boom, we moved aggressively, formed an imbalance. This is our fair value gap. This is our fair value gap as well. As you can see, we haven't inversed. By inversion, I mean the closure below the fair value gap. Well, we formed a bullish fair value gap, and now we close below it, which means a shift in market trend. The same as break of structure, but with a fair value gap. Boom, we moved higher, so displaced higher, and then inverse the gap by closing below this level. So in an uptrend, we're respecting all these gaps. So here's an uptrend, here we got our break of structure. We moved higher, boom, fair value gap, we tapped into this fair value gap, continue our move up. Same goes here. Yes, we are in a bullish trend right here. We are in a pullback phase. So in general, we're bearish. But we're pulling back into all of these imbalances. We pulled back into this imbalance, we respected it. As you can see, we haven't closed above it. So we respected it and displaced lower like crazy. Again, boom, we're in a downtrend. Again, we tapped into this imbalance and we displaced lower. Simple, simple. The next video about the fair value gap, so in part 2, I will explain how we can use it to enter our trades. So follow part, I don't know, some part